Good morning. Today is Wednesday, November 10th. I'm Marv Eisen. We start off the day looking at the economic calendar, and today for November 10th, we have the initial jobless and continuing jobless claims at 8:30. Also the consumer price index at 8:30. Those can move the market, but since they're going to be announced an hour before the open, it's not going to affect the opening prices, maybe a jiggle in the morning. But today's video, I want to talk about what happens when prices don't conform to our calculated targets. As you know, if you've been watching my videos for any length of time, you know that I send students in my Eminis trading course price targets each day for the following day's trading. Price targets that the market is likely to reach the following day. Today, after we look at the economic calendar and see that there's nothing going to be announced during the day that's going to be market moving, we move on to the morning news, and I use CNBC, you use whatever source that you prefer. And the news basically is that futures are down across the board, and the headline, stock futures lower ahead of key inflation data. Well, that data again is not going to be affecting our open much, because if there is a wrinkle, it's going to be an hour before the market opens. Moving on to our chart, and this is a one-day chart of the micro E-mini. It would be the same for the E-mini. This is a one-day chart of yesterday, November 9th, and this is the target. These are the targets that I sent my students: 46.94, 4,700, and 47.18. And if you notice, the trading range was barely penetrated. This doesn't happen often, but it does happen. And nevertheless, the market hit its head, bumped its head against our resistance line, and then retreated from there, hit our target marked at this horizontal line at 46.94. So if you hopped on here and you planned on getting out after it hit the target, you would have been rewarded, but still the action was so fast, if you stayed on, you would have been rewarded down to where? And I'm going to move this chart up and expand it. And this goes back to our basic candlestick reading. This is a 3-minute chart, and if you notice, the market declined. And where did the decline? What signal? Where was the signal that marked the end of the decline? Well, it was right here. I don't know if you could see it. It's this doji, this doji with the long shadow right here, and that signaled the end of the decline. And if you were proficient at chart reading, you would have gotten out here and had yourself a very nice day, depending upon, let's see, this was at 46.70. So if you got on here at around 46.97, 46.95 or thereabouts, you would have done very well with a 25-point gain. Nevertheless, what happens when the prices don't fit into the trading zone that I send my students? Well, I made another video a while back on what happens when prices don't move into our trading zone, and I'm going to put the link to that video, that YouTube video, in the description so that you can review that after you see this. At any rate, what's going to happen today? Well, before we get into that, I want to go into this fact that prices did not go into our trading zone. And this involves another piece of chart reading skill. And for that, I'm going to go to the S&P, the actual S&P on a daily basis. This is a one-day chart of the S&P. And this was yesterday, November 9th. But look at the 2 days prior to that. As we see, after a long move up, the market on November 5th, a Friday, showed us a doji. And on Monday, November 8th, another doji with an even smaller range. And this was a pretty good indication that prices might have ended their upward trajectory. So this would entail some experience with chart reading. Remember, when we're doing day trading, we're looking minute to minute, sometimes second to second if you're a scalper, and many of us are. But we also have to keep an eye on the big picture. And the big picture here indicated, well, it indicated caution. It indicated that this trend upward might be coming to an end. And yesterday on November 9th, we saw that to be true. Today, I did send my students out other price targets. And if you are enrolled in my E-mini trading course, you'll get those price targets as well and be a better trader and a more knowledgeable trader and a more profitable trader having those numbers. So anyway, this is Marv Eisen for Timeless Dollar. Trade safe, exercise a lot of patience, and have a great day. Thanks for watching.